Today we're going to be talking about properties that are really investment properties, but just keep in mind that depending on the situation the insured has going on, maybe the situation calls for that it's not written under a DP1 or a DP3, even if it is an investment property. But in this case, we're assuming that it is going to be written under a DP1 or a DP3 form. And so we're going to make sure that we know what we're talking about when we offer them these kinds of policies. So these DP1 or DP3, just FYI, you might see some companies write it as DF1 or DF3, but they're talking about dwelling fire. And it's essentially what it is. It's you're protecting your dwelling, a dwelling, similar to the homeowners, right? Um, uh, in the cause of a fire, right? But in essence, a dwelling fire policy works very similar like a homeowner's policy, but it has different limitations, okay, and different exclusions. And that's the main thing that we're going to focus on. Okay. So we're going to go and we're going to go and we're going to go ahead over these quick tips that we went over the last couple of weeks. But just remember when you're writing a property insurance that it does require and some underwriting, some due diligence on your behalf, because the last thing you want is to submit a policy or quote somebody, and the last thing you want is to have the wrong information and give somebody a number, and then once that number does show up on the screen and you present it, you get different numbers because you didn't do your due diligence. And this is how you do your due diligence. It really doesn't matter how old the property is. It's just make sure you get something, some kind of concrete proof. Obviously, the case is different when it's a brand new property. There's a brand new property, they might not everything. Obviously, it's uh, the cream of the crop, right? It's the top of the line. It's everything is brand new. It's the year of. Um, the one that always you might need, depending on the property it was built, might be this one because you're not sure if what hurricane protection was built on the house. You don't know if what grade to put it. Most of the time, it is going to be the best grade, but even then, like this, just reiterating the fact that we need documentation, we need declaration pages, we need the notice of non-renewal, we need everything so that you can provide the client the best situation possible. Okay. And again, avoid any guesswork. This is what you want to do with all of this. You want to avoid any guessing. Okay. So again, let's continue. I'm not going to do too much time on this slide. Okay. So these are essentially the definitions of what it comes down to. Okay, I'm gonna share this with you guys, and you guys already have this information. If you don't, it is in the agent portal. Okay, but I am gonna share with you the dwelling fire resource that you want to provide to all of your clients when you are presenting this and when you are showing this to or presenting a proposal, right? Whether you want to put it as a link or send it as a PDF, right? You want to make sure that the insured, when you present them these numbers, and remember, a lot of that we do is sometimes a little overwhelming. For any of you that have an insurance policy, pull out your insurance policy and start reading everything. It's a book about this big. Our goal is to simplify this process, right? And how are we going to simplify this process? By them at least understanding the basic knowledge. Remember, the main thing we have to fight is our clients' own ignorance. Okay, we have to educate them, and if they see us as the best educators, they're going to choose us every single time. All right, considering the amount of carriers that we can offer them. Okay, are all these carriers going to give us an offer for every property? Absolutely not. I wish that was the case, but it just really depends on, again, you make sure you're doing due diligence. And one of these is that you're presenting the insured the definitions of what this means. And if he wants you to go through it with him, if he wants you to break it down, simplify it for the person so that they understand what what they're paying for and why they're paying for it, which is our main goals for all of our clients. Okay, understand what they're paying for, why they're paying for it. This is why you're paying for it. Because if something happens to your house, okay, to your in this case, if something happens to your investment property, right? Um, there are some cases, some instances where it's an owner-owned DP3, right? But these are specific scenarios when you're not getting anything anywhere, so you have to write a DP3. Okay, so either way, let's continue. Make sure your insured knows the different coverages, and there's that big difference that I went over last week when I did the homeowners one, and it was this part right here. This part right here is what distinguishes um, this part, the additional living expense, because obviously, as a DP3, an investment property policy, the insurance companies are aware that you're using it to produce cash flow, and they're you want to protect those little extra things that are able to produce that cash flow for you. And so, besides that, it's very similar to your homeowner's policy. Okay, and again, we're not going to get into that right now, but essentially, this is the dwelling fire definitions on the policy. And so just remember that that DP3 can be an apartment, it could be a townhome, it could be a single family home, it could be a mobile home. Okay, anything, anything can serve as DP3. There's no limitation to that. Of course, a commercial property policy is not going to be uh, investment property. In terms of what dwelling fire does, and dwelling fire is a homeowner's property that's used as an investment property. I'm going to get into this. These are the main differences, okay, in the types of DP3 policies and the types of dwelling fire policies, okay. And the first one we're going to break this down is DP1. So I've been saying DP3, but there's another one. There's DP1 as well, but DP3 is always the one that is going to uh, serve the client more, right? As we can see here, the DP3 versus DP1 is that it's an open risk policy. It's going to cover all possible risks except a small list of risks that are excluded from the policy. Okay, and the most common that are excluded are ordinance or law, which is normally found on a homeowner's policy, but it's not most of the time included in the DP3. Movement of the land, right? Water damage, which it could be included in some DP3 policies, but normally water damage is already included in a homeowner's policy to a limit of $10,000 in Florida at least. Um, any power outages, negligence, war, nuclear. These, but again, these is very important that these are excluded, right? These things are excluded. Pretty much everything else is all possible risk, so most of it is included. Versus the DP1, right? Like the most basic one is a designated perils. Okay, this one is an open risk. Okay, a designated perils, right, means that it's there's specific perils that our coverage is named. So you're limited to only this happening. Okay. And then again, the most included that are included, that's why I specified that here, is fire and lightning, internal explosion, external riots, civils, etc., etc. Okay. So again, that's the main difference. All right. Now, which one is best suited for the client? Okay. And which one is best suited? Well, it depends on the person you're assisting. And this is a very straightforward picture that can be used, but it depends on the value that the person has on this property. If he doesn't have much value in it, or doesn't, you know, doesn't see it as a big investment, and some people might, then you would offer him a DP1, okay? And essentially, it's a property that's in less better conditions than a DP3. Okay, again, this picture puts it very clear, okay, very concise, and to what can fit for the different insured, okay? And so just remember that, we always want to offer what the client needs or wants in this particular situation. Okay, and so depending on the person you're working with, okay, he's gonna either give you the information you need by the phone or through email. All the information we talked about already, he's gonna have to provide it some way, somehow. Okay, And so when you're working on a dwelling fires policy, again, it's a similar approach. I want you guys to understand that it's a similar approach to a homeowner's policy. Okay, with the difference being that the the person, one, doesn't live there most of the time. Okay, and two, that normally the DP3 normally most of the time is usually less expensive than an HO3. Okay, so this depends on the case, depends on the scenario. Um, you're gonna want your prospect to make sure you fills out your form, whether it's verbally or he does it himself. You want him to fill out your form, and everybody should have access to their form. Okay, and so that you're not missing any questions. Okay, you want to make sure you get all the questions answered. Again, going back to being clear from the beginning, making sure that you get that phone call. Hey, I need homeowners. I need to invest my. I need to protect my investment property. Great. I'm going to give you all the information you need so that you can make an informed decision. But I am going to need some help from you. Otherwise, I can't provide you that information. Okay. So we make sure that they're on the same page as we are, and we get that information. Otherwise, we cannot help them out. Okay. These are our dwelling fire carriers that we have access to as of June 2024, as of this recording. It's a possibility that the next time we ever run this through or you see this, maybe that these aren't the carriers, but we'll keep you guys updated all the time on our specific carriers. So again, always remember that we want to explore all these other carriers. We want to try all these other opportunities before we get to a citizen's property. Okay, since it's our last resort, and if there's no other offers available, no, all the other companies, they just saying no, and maybe they are offering something, but maybe once I did quote this property here, once I did quote this property here, um, that 20% rule applied. So what is the 20% rule? For those that don't know, um, the premium of any of these other offers must be 20% or more higher than the premium the citizen is offering. Okay, I will do a calculation on another citizens training on how to differentiate that or decipher that amount. But just remember that if any of these other companies offer you something and it's within a 20% price point of what Citizens is offering, okay, then you have to go with the other carrier. You have to go with the other carrier. Okay, so just remember that. And so I want to show you guys the specific things you're gonna need, right? So I'm gonna go through a very quick scenario on what it is going through fetch, right? I'm gonna go I won't go through the quoting process because I want you guys to really learn that one on Quote okay, which is the rater that we use really for these properties. You can use your own rater, but that's the most uh, efficient one that we've seen here, at least in Florida. What do I need from start to finish to make sure that I'm able to present something? Okay, so the first thing I need to do is once I have the information, right? Remember, I want to make sure that I get all the information I need, and all the information is going to end up where it's going to end up in my CRM, right? So once I create this person, I have the information, I've filled out his profile. I'm going to create this person in my rater. Okay, my CRM and my rater are two different things. My CRM holds all my data. My rater is just simply that it rates my offers. It does a lot of my job, but not really. It just gives you a brief overview, all right? A brief overview of what's possible. Okay, from there, you have to make sure that the steps, I'm skipping steps here, but from there, you have to make sure that you're going into the carrier website directly from your rater, right? If there's no offers, you want to see the messages, but directly from the rater, okay, um, is where you're going to see any potential offers. And so you want to have all your resources available. You want to have them all open. It's gonna look beautiful across your screen. So many tabs open, but you're gonna need all these resources to put the correct data. Okay, obviously the inspections to put the correct data. Zillow.com, Realtor.com, property appraiser search. Okay, because a lot of this information Some of it is not on some sites, some of it is. Okay. So obviously the ideal scenario is that you grab all this information, you have it on hand, and so that when you're quoting and you're in your rater and you go into the website, that you're just, putting information. It's copy paste. You're not thinking about it too much. You're not researching where's the information, where's this, where that. You have it ready to go. It's going to war and having your shield, having your sword, right? Having your shoes, having your breastplate. And so try to go to war and try to write up a policy without any of these resources. You're gonna have a hard time. Okay. So from there, of course, we want to review the best offer, right? Especially when I'm writing new business. Okay, I want you guys to get this clear. When I'm writing new business is a new client, new new prospect that I've never helped before. Okay, when I'm writing new business, okay, I don't want to overwhelm the client with 7 different companies. Okay, so I don't want to overwhelm the client with 7 companies. I want to give him the best offer that I was able to find. So from that image that I showed you guys, remember I present him the 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 pretty cute little picture of all the carriers. Look, from all these companies that I have access to and that I attempted, this one is your best offer. When I'm writing new business, very clear about that. When I'm renewing this person, and again, I should have wrote to the sale and to the future sale, because to the future sale, I have to make sure that I'm keeping this person on the books. I have to make sure that I'm giving him the best service that I can from the beginning. He's gonna expect for me to give him that service every time because that's the expectation I've set for this person. On upon renewal, I am going to present to him a very summarized detail of all the different companies that I attempted, and then I'm going to tell him, look, this is your best one. This one was also very competitive. Okay, from that point. But again, you want to build continuity with the carriers and the clients. You want them to have that continuity. So the only reason that you would ever want to change somebody from one carrier to the other, if it's the offer they got is outrageous, right? If the offer they got is 300% or 200%, or even 100%, like a big, you guys know what I'm talking about. Okay, if that rate is a very big difference, that's when I'm going to probably look. I was able to find you something better. I suggest we go this route. Otherwise, I want to be able to make sure that the client builds that continuity with the carrier. Okay, but again, I'm going to do my job every single year, every single time to make sure that this person is presented all the available offers, right? And so, how do I take away the shopping? I'm, I'm shopping around. I'm shopping around. With me, you're going to do all your shopping. I'm telling you, I already did all your shopping for you. This is the best available. Let's do this, right? So I want to take away that whole I'm shopping around. I want to let him know that I shopped all your carriers for you. Okay. So from there, okay, and this is a very brief, very brief overview from the whole road to the sale. Okay. From there, once I review the best offer available and I created my proposals, I'm going to present to him my proposals, right? At that point, he's either going to look at it and determine if, he has any questions, he's going to call me back, or I'm going to set an appointment with him. Hey, let's set an appointment to talk about the proposals that we went over. We're going to set that appointment, and then from there, we're going to have a conversation. Okay. So once that's completed and the client agrees to your proposal, then you have to remember every single policy that we write, it has to be signed. It has to be signed. There's no gray area here. There's no ifs, ands, or buts. Everything has to be signed, okay? And you have to upload all the required documents that are being requested of you. This is not you know, this is not a there's no leeway here, okay? If the company tells you I need this, make sure you get that. Otherwise, what's gonna happen is you're gonna look like the bad agent who didn't upload the things on time, who uploaded the wrong thing and caused a premium increase, caused a policy cancellation. So let's make sure we avoid all of that by getting everything we need signed and all the required documents to the carrier and broker portals. Okay, this is very important. Okay, so if I upload it to the carrier and I don't upload it to my broker portal, then nobody's getting any type of compensation. Nobody's getting any type of compensation. I want to make sure that I'm uploading it to my correct portals. Okay, this is very important. Okay, and then of course, make sure you stand out. Once you've done all of this, you've done 1 through 9. Okay, you did all your job, you did your whole job. Make sure you send the client the thank you, the welcome packet to the insured and any additional parties with all the resources documents. So if there's a realtor going on in a deal, you want to make sure you copy the realtor, right? If there's the mortgage company, he's the mortgage broker is the one that's been reaching out to you. You want to make sure you copy everybody on this conversation, okay, with all the documents, right? Possibly the thank you, maybe the thank you, I'll just send directly to the client. I'll put the create your portal with this company. I'll go here. You know, most of the time, remember with homeowners and dwelling fire policies is that there most of them are not going to be monthly premiums unless you do a finance agreement with them. And so just remember that if it's not a monthly premium and you're not doing a finance agreement, then it's going to be paid to the carrier directly. Okay, and then of course, most of the time carriers only offer quarterly payments, semi-annual payments, or paid in full by the mortgage company of the client, right? And then from there, the client pays his monthly premiums, right? So just keep that in mind. Okay, so um, so before I let you guys go, we have some time today. I want to go ahead and show you guys the process of what would go on if I went into Fetch. Okay, so once I've created the client profile, you're going to access Fetch. Okay, and Fetch is simply, um, it's not your know-it-all. Okay, but it's going to give you more or less an idea of the company that might give you an offer. Okay, so I'm gonna go ahead and I'm gonna click and I'm gonna click on the last one we were working on, 14051 South 30 Terrace. So okay, okay, so Fetch is going to do a data search in the background. Okay, and once that comes up, based on this information, where did they pull this 3390 from? Where do they pull all these numbers from? From public data. Now, from here, you would put the data that you have. So if you have the correct data, the roof year, the type of roof it is, all of this will be on your 4 point or your wind mitigation, right? So again, hard to do our job without these reports. Okay, even if they're not new, make sure you get something, anything you have, just so I have an idea of the property, right? And then they don't have nothing. I need something to go off. And you look at the declarations page or the renewal declarations page. That renewal declarations page, sometimes on the first page or the second page, it's gonna show the roof year. It might show some of this data, but even then, at that point, you want to make sure that you are uploading it to or putting the data that you have. So let's say this roof is from 2021. Okay, so notice I still have 8 carriers, but what if this roof was from 1983? Okay, I still have the 8 carriers. That's good. Okay, so let's just put it to newer roof. Okay, and these things will change depending on what I put. Let's say this HVAC age is 20 years old, so it's from 2004. Okay. Okay, so look, I simply changed the year of something, and now I got demoted to 8 carriers. So again, Fetch is not a know-it-all. Remember, it's not that they're going to tell you yes or no, okay? But they're going to give you an idea of what might or might not be approved. So if you notice here, you're kind of already getting an idea. Depending on what I'm quoting, I'm going to be limited to a DP3 to these 2 carriers once I put, okay, what kind of form I'm looking for, okay? So let's say I'm gonna want to skip to that area. Let's see if it lets me. Protection class usage. So I'm gonna put here it's a rental property. Okay, I'm gonna fill out this data that I have. Okay, I don't have that data, so I have this. I have I believe it's this one. If I had a dog, I'd put a dog, but I wouldn't worry about the dog one too much, if I'm being honest. The foundation type, okay. Um, and again, all of these things and what they mean, okay. You wanna understand what it means. Okay, liabilities, what the house might have, right? Lapse of coverage, this one's important. So look, based on what I put, I already got narrowed down to four carriers. I don't know what other four carriers you're looking at, but I see three here. But I want you guys to see this. This one's very important. So I'm gonna put here a lapse of 31 days. Okay, so I already got rid of another carrier. Most carriers don't like more than 30 days lapse. Okay, just remember that one. So 30 days, I'm gonna put here 20 days. So 20 days, I'm gonna put 0. Let's see. So now I got one, I got another one. So again, this last one is very important. So you want to make sure that you fill that one out. You know, any information you put is gonna help. Okay. Um, and so now I know that I have three possible companies here. Three possible companies that might give me something. Swift, I didn't even specify HO3. Let's see if it lets me change the form. So Fetch just had an update here. Looks nice. So, but at this point, I'm not even looking at this one either because let's say I'm only going after DP3. I know I have security first, and I know I have Florida Peninsula that might give me enough. Okay, so from there, with this information, I would go back to my rater. Now, my rater might give me another set of four possible companies. Well, from that information, I'm going to select what I'm going to go quote. So from here, I would go to Florida Peninsula or security first. After I quoted it in my rater, very important. I'm not going to go through the rater section again. That's going to be a quote rush training in its own. Um, and quote rush training is available already, but just remember that some things, will go faster if I teach you guys. So um, again, I'm gonna go to my Core Rush. Core Rush might give you a couple more other offers, but from here, I'm essentially gonna go directly to the carrier, which is what I was talking to you about. So I would go directly to the carrier and I would quote the information with what I have directly on the carrier's website. Okay. So again, I'm just gonna stop this. Okay. And remember, as of right now, these are all the carriers that I want to quote with. Burns and Wilcox is more of a broker, right, than a carrier itself. So that this process to get an offer from them will be more manual. You'll need to fill out a form, send it to an underwriter, get an offer in return. All of these other ones we can do so ourselves. But again, we want to make sure that we try all avenues possible when nothing else works. When nothing else works, I want, and even if Citizens doesn't work, that's when I'm gonna go to Burns and Wilcox, which is more of an excess and surplus underwriter. I'm gonna go here, okay? And they might exclude something that, for whatever reason, was excluded on the Citizens property policy. They might exclude, uh, you know, let's say water damage, which is a big deal. Okay. Okay. So now that I went through that, okay, now I'm gonna uh, let you guys ask me any questions that you guys feel that you know may be necessary. Remember that our team is here for you. Okay. This is our personalized underwriting team. So if you need help with a specific case, somebody on our team is gonna answer a question and help you out. Same thing with our service team, our agent support team, and our contracting team. Okay. Remember that the goal is so that you're able to offer all of these lines, and you can do that by reaching out to our contracting team. Okay. And then I want to go ahead and open up the floor for some questions. Okay. I want to go ahead and yeah. Anybody have any questions that they might want to ask pertaining to what I went over, or if they didn't understand something, you guys can go ahead and send a little question there. Remember that if you weren't able to join our webinar, or you're gonna get a recording of this either way. So,
Josh, we have a
mhm.
question here that says, can we ask for all this information? Are we allowed to ask pre-qualifying questions, pre-qual questions?
I mean, yeah, your pre-qualifying questions would essentially be, um, you know, do you currently have insurance, or is this a new purchase, right? That's essentially your pre-qualifying at that point. But then it's, you know, do you have insurance or not? I think that's really the only qualifying question you might have. You might have, honestly. You have insurance.
We have another question as well that is, can I require a renter's insurance while I have this policy?
Yes, yes, absolutely. It's always going to be recommended, actually, that you allow your renter to have that policy. Remember, the dwelling, your DP3 policy protects you, right, and your liability. But if your renter does something that causes damage and has left you with all the fault, well, then you didn't require that person to have renter's insurance.
What are the deductible options? Do they vary?
Yeah, so similar to a homeowner's, the deductible options are going to vary. Um, Depends on the combination, right? But for all perils, right? So I'm gonna just pull up this. Okay, so for our all peril, okay, our all peril, for the most part, you're going to see, 500, 1,000, 2,500. Uh, you might see 5,000, and that's as high as it's going to go. And for hurricane, again, depends on the combination and depends on the coverage A. So some coverages A, if your coverages A is less than, I don't know, $50,000, they might tell you that, oh, we can't offer you $500. We can't offer you $2,500 in all peril deductible because your coverage A is under $50,000. Um, but other than that, again, your coverage A is what's going to determine a lot of these, what's available and what's not in terms of deductible. And for a hurricane, you're going to find, you'll find $500 hurricane deductible if the coverage A allows it. You'll find 1,000. You'll find 1%. You'll find 1%. Remember that 1% is 1% of coverage A, or 2% of coverage A. Some companies offer 3% of coverage A. Many don't. Many go from 2, 5, 10%, maximum 10%. And of course, you could exclude it at that point, but at that point, you're excluding hurricane. Okay. Something I didn't touch, which is essentially a dwelling fire policy, um, without hurricane. So what I just mentioned, this would be a DW2. So it's a dwelling fire policy that's excluded on the wind. Remember, this DW2, it's really only for properties that are along the coast, for the most part. You're gonna find that DW2 on properties that are really close to a coastline, and there's no carriers offering you a DP3. So you might have to do DW2, and you might have to do uh, an HO3. It gets a little complicated there, but I won't throw too much at you. But there are some instances where you might have to offer an HO3 and an HO3 that excludes the wind, and then a DW2 that includes the wind. Okay, so just some cases out there that you might run
Perfect. We do have two more questions here. The first
into.
one is, can I offer this option to a homeowner when he comes for a new policy on a when he comes for a policy on a new property? And
For
then
a
the sec
homeowner, for a
yes.
homeowner, so it depends, is he gonna live there or not. If he is gonna live there, okay, then you can offer it to him. Actually, you can offer it to him, and it just might not be as competitive with the HO3. And when the HO3, there's gonna be more coverages that benefit the homeowner. But in terms of price, it might be better for the homeowner if he wants it. We can definitely look at it.
And the second question is, what if a lender requires that they insure for a loan balance?
Then at that point, you have to make sure that your replacement cost that you're quoting on these different carriers is equal, because remember, the insurance company is only going to insure, and they will only insure up to replacement cost. So if a lender is requiring the coverage to be 800,000, you have to make sure when you are giving the estimator, or you're estimating the value of the property, that you're putting the highest types of kitchen details, the best floor tile, the best windows. You have to elevate. You're gonna have to elevate the value of the property at that point. Most lenders are not gonna require for you to insure the entire loan, but in those cases that they do, you have to make sure that you are adding enough value to the replacement cost estimator, so that when you're getting your approval from the quote or from the company, um, the the total coverage A is up to the insurable value. Because again, remember, the insurance companies, they don't care about your loan. They care of how much it costs to insure or to rebuild the structure of your home. That's what insurance is. We are the great indemnifiers.
It would seem as though there is no other questions. I think with this, we are good. We'd like to thank everyone for attending today's webinar, and we wish you all a wonderful day, as well as that you came in and left knowing a little bit more about DP1 and DP3. We thank you all for attending.
Thank you guys. Have a good day.